Yes, good morning. Yeah, this is going to be a critical week for global equity markets, particularly around the Fed decision this evening. I think it's been a very interesting last few weeks across global equity markets. Obviously, the Omicron news took markets by surprise. We saw a sharp sell-off on the back of that, but we then saw a fairly impressive rally, particularly last week, with US markets closing near all-time highs on Friday. But as we get through this week, really, it's all eyes on the Fed this evening. And for equity markets, you know, this really sets the tone into next year, because the unwinding of this central bank liquidity that has been such a dominant theme for the last number of years is key to equity markets as we go into next year.
Well, with all of that in mind, do you think that the buy the dip mentality still holds? In particular, over the last couple of years, with the heavy retail investor involvement, in particular in the U.S., every time there's been a dip, we have seen investors come in and buy equities at lower prices, especially the retail community. Do you think that mantra still holds and will still hold after this week?
Yeah, I think the evidence of the last 3 to 4 weeks definitely supports that. Retail demand, as you say, particularly in the US, has been very, very strong, particularly in large cap tech as well. One thing I would add is that we have seen a certain amount of de-risking over the last number of weeks, and some leverage been taken out of the system. So I think equity markets positioning as we go into, you know, the various central bank rate decisions over the next couple of days is relatively neutral. I would also add that in terms of the messaging from the Fed, particularly, you know, the messaging as of 2 weeks ago, the hawkish expectation into tonight has been pretty well digested by the equity market. So I don't think there is any particular heightened degree of nervousness. We can observe that from where volatility markets are trading, where the VIX is trading. So I think equity markets are looking, you know, fairly constructive here.
Looking across the different regions, where do you see the most value? What is Barclays saying to investors, to clients, around where they should be looking to put their money, especially given that we have seen a fair amount of deleveraging and cash built up now over the last couple of weeks?
Yeah, look, the Barclays equities outlook is positive into next year. We recently published our global equities outlook for 2022. I think even taking into account some of the, you know, the acceleration of tapering that you touched on earlier, the forecasted rate hikes that you also mentioned earlier. The reality is we are coming from a very, very low base from an interest rate perspective. So from an equities point of view, even in an environment where we are seeing a significant number of rate hikes, we're coming from a very low base. And I think, as you said, there's a lot of retail demand out there for equities, and the growth outlook for equities is also very positive. There has been some short-term stresses along the way, particularly, as I said, with the Omicron variant hitting the news. But what we've seen is a very resilient reaction from the equities market. So we remain very constructive into next year.